What if I told you that we're standing at the edge of one of the biggest wealth transfers in modern history? While everyone's talking about Bitcoin and tech stocks, something much bigger is quietly brewing in the background. Gold and silver are already exploding, but they're just the tip of the iceberg. A massive commodities supercycle is coming, and if you're not paying attention, you might miss the opportunity of a lifetime. Before we dive deep into this game-changing topic, if you find this video valuable, please hit that like button and subscribe to our channel. We bring you insights on markets, investments, and economic trends that can genuinely impact your financial future. Now let's get into it. So what exactly is a commodities supercycle, and why should you care? Let me break it down in the simplest way possible. Imagine the economy as a giant machine. This machine needs raw materials to function. Things like copper for electrical wiring, oil for energy, lithium for batteries, wheat for food, and yes, gold and silver for investment and industry. A commodity supercycle happens when the prices of these raw materials don't just go up for a few months or a year. They keep rising for 10, 15, or even 20 years. It's not a quick spike. It's a long, sustained trend that creates massive wealth for those who position themselves correctly. Now here's the thing. We've seen these supercycles before in history. The last major one happened in the early 2000s, driven primarily by China's rapid industrialization. China was building cities at an unprecedented pace. They needed steel, copper, coal, oil, everything. Commodity prices went through the roof and people who invested early made fortunes. Then it cooled down, prices stabilized, some even crashed. But now all the signs are pointing to another massive supercycle. And this time, it's different. This time, it's not just about one country building infrastructure. It's about the entire world transforming how it produces and consumes energy. Let's talk about what's happening with gold and silver first, because that's what most people are noticing right now. Gold has been breaking records. Silver is following close behind. Why? There are several reasons. Central banks around the world are buying gold like crazy. They're diversifying away from the US dollar. Countries like China, Russia, and India are stockpiling gold as a hedge against economic uncertainty. Regular investors are also rushing into precious metals because they're worried about inflation, currency devaluation, and geopolitical tensions. When people lose faith in paper money, they turn to real assets. That's exactly what we're seeing. Silver is even more interesting because it's not just a store of value like gold. Silver is crucial for industrial applications. Solar panels use a lot of silver. Electronics use silver. Medical equipment uses silver. As the world pushes toward green energy and more technology, the demand for silver is skyrocketing. But here's the kicker. The supply isn't keeping up. Mining new silver is expensive and takes years. So you have rising demand and limited supply. That's a recipe for higher prices. But gold and silver are just the beginning. The real story, the one that most people are missing, is what's happening with industrial metals and other commodities. Let me paint you a picture of what's driving this supercycle. The world is going through three massive transformations all at the same time. First, there's the green energy revolution. Second, there's the infrastructure boom in developing countries. Third, there's the reshoring and reshuffling of global supply chains. Each of these trends alone would be enough to push commodity prices higher. All three happening together, that's a supercycle. Let's start with the green energy revolution. Governments around the world have committed to net zero carbon emissions by 2050 or even earlier. That sounds like a nice political goal, but do you know what it actually means in practical terms? It means we need to completely rebuild our energy infrastructure. We need millions of electric vehicles. We need massive solar and wind farms. We need new power grids. We need battery storage facilities. And all of this requires an absolutely staggering amount of raw materials. Take copper, for example. Copper is called the metal of electrification for a reason. It's the best conductor of electricity after silver, but it's way cheaper. Every electric vehicle uses about 4 times more copper than a regular gas-powered car. A single wind turbine uses tons of copper. Solar installations need copper. The new electrical grids we need to build will require millions of tons of copper. Some estimates suggest that we'll need to mine more copper in the next 30 years than we've mined in all of human history. Think about that for a second. More copper in 30 years than in all of history. Where is all that copper going to come from? The problem is that discovering and developing new copper mines takes a decade or more. Mining companies haven't been investing enough in exploration and new projects because prices were low for years. Now demand is surging, but supply can't catch up quickly. This is creating a supply crunch that could send copper prices to levels we've never seen before. Some analysts are predicting copper could double or even triple in price over the next few years. Then there's lithium. If copper is the metal of electrification, lithium is the metal of energy storage. Every electric vehicle battery is packed with lithium. Every grid-scale battery storage system needs lithium. The demand for lithium has already caused prices to go crazy in recent years. There was a massive spike, then a correction, but the long-term trend is clear. We need exponentially more lithium, and again, supply is struggling to keep pace. Countries are racing to secure lithium supplies. Companies are scrambling to open new mines and processing facilities. This is just the beginning of the lithium boom. But it's not just copper and lithium. There's a whole group of metals called rare earth elements that most people have never heard of, but they're absolutely critical for modern technology. Elements like neodymium, dysprosium, and praseodymium are essential for making powerful magnets used in electric vehicle motors and wind turbines. They're also used in smartphones, military equipment, and countless other applications. Here's the problem. China controls the vast majority of rare earth production and processing, over 80%. The rest of the world is now desperately trying to build its own supply chains because depending on one country for such critical materials is a massive strategic risk. This is driving investment and prices in the rare earth sector. Nickel is another metal that's going to be in huge demand. High-performance batteries need nickel. Stainless steel production needs nickel. As battery technology improves and electric vehicle adoption accelerates, nickel demand is going to soar. We're already seeing countries like Indonesia, which has massive nickel reserves, becoming incredibly important players in the global economy. Now let's talk about the second big driver of this supercycle, which is infrastructure development in emerging markets. While developed countries are focused on green energy, developing countries are still in the phase of basic infrastructure build-out. Countries in Africa, Southeast Asia, and parts of Latin America are building roads, bridges, power plants, and cities. This requires enormous amounts of steel, cement, aluminum, and other basic materials. India alone has plans for infrastructure development that will require millions of tons of materials over the next decade. Africa is urbanizing rapidly. These trends create steady, long-term demand for commodities. The third driver is the reshuffling of global supply chains. The pandemic taught the world a harsh lesson about being too dependent on faraway suppliers. Companies and governments are now bringing manufacturing closer to home or diversifying their supplier base. This is called reshoring or friendshoring. Building new factories, new supply chains, and new infrastructure in different parts of the world requires, you guessed it, more commodities. More steel for factories, more copper for equipment, more energy to power it all. And speaking of energy, let's talk about oil and natural gas. I know, we're supposed to be moving away from fossil fuels, right? But here's the reality. The transition to green energy is going to take decades. In the meantime, we still need oil and gas. In fact, underinvestment in oil and gas exploration over the past few years has created a situation where supply might not be able to meet demand, especially as developing countries continue to grow. This could keep oil prices elevated for years. Natural gas is also seen as a transition fuel because it's cleaner than coal. Europe's energy crisis showed just how critical natural gas is. Prices can spike dramatically when supply is tight. Even agricultural commodities are part of this story. The world's population is still growing. People in developing countries are eating more protein as they get wealthier. Climate change is affecting crop yields in various regions. Fertilizer prices have been volatile, which affects food production costs. All of this points to potential long-term strength in agricultural commodity prices. Things like wheat, corn, soybeans, and coffee could see sustained higher prices. So what does all of this mean for you as an individual? Why should you care about a commodity supercycle? Well, first of all, it's going to affect your daily life whether you invest or not. Higher commodity prices mean higher prices for just about everything. Your car will cost more because of the metals in it. Your electricity bill might go up. Your food will be more expensive. Understanding these trends helps you prepare and make better decisions. But more importantly, if you understand what's coming, you can position yourself to benefit rather than just suffer the consequences. There are several ways regular people can participate in commodity markets. You can invest in companies that mine these materials. Mining stocks tend to leverage the price of the underlying commodity. If copper prices double, a well-run copper mining company's stock might go up much more than that. You can invest in commodity-focused exchange-traded funds that give you exposure to a basket of commodities or commodity companies. Some people even invest directly in physical commodities, though that's more complicated for most things besides gold and silver. The key is education and timing. You don't want to chase prices after they've already skyrocketed. You want to understand the fundamentals and position yourself before the major moves happen. That's why paying attention to these trends now is so important. We're still in the early stages of this supercycle. Yes, some prices have already moved significantly, but the structural trends I've described are going to play out over years, possibly decades. Of course, investing in commodities isn't without risks. Prices can be volatile in the short term. There can be temporary oversupply situations that cause corrections. Geopolitical events can disrupt markets. New technologies could change demand patterns. That's why diversification and a long-term perspective are crucial. Don't put all your money into one metal or one mining stock. Spread your investments across different commodities and companies. Another important point is that not all commodities will perform the same. Some will do better than others depending on how technology and policy evolve. For example, if battery technology shifts away from lithium to something else, lithium demand could plateau. But overall, the megatrends of electrification, decarbonization, and infrastructure development are solid. They're backed by government policies, corporate commitments, and technological momentum. One more thing to consider is the geopolitical aspect. Control over commodity supplies is becoming a major source of power and conflict. We're seeing countries compete for access to mines and processing facilities. We're seeing export restrictions and strategic stockpiling. This resource nationalism could actually support higher prices because it reduces the free flow of materials on global markets. It also creates opportunities for countries and companies that have these resources. If you're investing, it's worth paying attention to where commodities come from and which countries are securing future supplies. The bottom line is this. We are entering a new era for commodities. The old playbook of just buying tech stocks and forgetting about real assets might not work as well going forward. The physical world is reasserting its importance. You can't build an electric vehicle or a solar panel with just software and venture capital. You need real materials dug out of the ground, refined, and manufactured into products. The companies and countries that control these materials are going to have enormous power and profit potential. This supercycle is different from previous ones because it's not just driven by economic growth in one region, it's driven by a fundamental transformation in how human civilization produces and uses energy. That's a multi-decade trend. It's not going to reverse suddenly. There will be ups and downs, corrections, and rallies, but the overall direction seems clear. So what should you do with this information? Start educating yourself about commodities. Learn about the different metals and materials. Understand the supply and demand dynamics. Follow the news about mining, energy policy, and technological developments. Consider allocating a portion of your investment portfolio to commodity exposure. Talk to a financial advisor if you're not sure how to do this. Most importantly, think long-term. This isn't about making a quick buck. It's about positioning yourself for a major economic shift that's already underway. The people who recognized the last commodity supercycle early and invested accordingly made life-changing returns. The same opportunity exists today, but you have to be willing to look beyond the noise and focus on the fundamentals. Gold and silver are flashing warning signals and opportunity signals at the same time. They're telling us that something big is happening in the world of real assets. But they're just the messengers. The real story is much bigger. It's about copper and lithium and rare earths and all the materials that will build our future. Thank you so much for watching. If you found this valuable, please give this video a thumbs up and subscribe to our channel for more content like this. Drop a comment below and let me know what commodities you think will perform best in this supercycle. Are you already invested in any commodity stocks or funds? I'd love to hear your thoughts. Until next time, stay informed, stay curious, and keep learning about the forces shaping our economic future.